Wednesday, April 20th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how the party for UK house prices is over, in my opinion. I'm going to refer back to a video as well, and I'm going to kind of update it, a video I did in July of last year, looking at the nationwide UK house price in terms of gold, the average national house price, not the London. It's better to do the national one. And one thing I would say, this applies to most countries, I would say, in the West, in my opinion, because we follow the same fiscal and monetary policy, and most real estate markets, especially in Australia, Canada, US, New Zealand, are highly overvalued and have been for many years. So yeah, I haven't looked at this in terms of the US market or the Australian market, but I have in terms of the UK market, because that's where I am. And one of the reasons why I've updated this is that we're starting to see interest rates rise quite sharply. Not the Bank of England rate or the official rates, but bond yields. And I just want to share with you this screen here, just to show you why looking at this makes me think that the trend is your friend, of course, until it isn't anymore. It's an old saying in the markets that the trend is your friend. But if you look at the top chart here of the 10-year gilt or UK government bond yield, that's the 10-year. This is from the early 80s. And we've seen a continuous drop. Of course, there has been ups and downs along the way, but it looks like now there's no way to go but up. And we've broken through that trend line, as you can see. Right now, I would say the Bank of England and the powers that be are fighting hard to keep it below 2%. I think this is where we've been in the last day or two, around 2%. Yeah, just consider that we were below 1% about a year ago, maybe a little longer ago. Below, of course, I've got the nationwide average house price adjusted for inflation, or what they call the real house price. And if you notice that actually since the oil crisis, it hasn't really gone anywhere. It's, if anything, it's still below the top there in real terms. It does feel, of course, in nominal terms that house prices are doing very well, but not according to this. So when I used to work in the city of London, and this was when I was at MF Global, while I joined MF Global in 2004, at the time it was called Men Financial, I had a good friend who was also into gold. And we started looking at the UK nationwide house price. And then he looked at the ratio between the average house price and the price of gold. And I have to thank him for that idea. If you're watching, Aaron, I won't say his last name, probably not really appropriate. But yes, I did a video last July about this, and I entitled it UK House Prices to Gold Ratio Over the Last 100 Years. I'm going to put it up in the cards and in the description. You might want to watch that. It's a long one. I did it as a weekend video. It's about 33 minutes, but it might help you understand what the ratio is all about. Well, simply put, it's how many ounces of gold you need to buy the average house price. And I went back to the 1950s. So with no further ado, I'm going to share the data and the charts with you and show you what's happening. And it's very similar, I guess, to the nationwide real house price, if you look at it. So I've updated my numbers. I've added the end of March gold price, and that was the PM fix at the LBMA. And I think it was, if you look here, scroll down, it was at 1479. So that's the gold price going back to the early 50s. You see that in 71, of course, Nixon closed the gold window, and then basically the price of gold went floating, and it's floated up ever since. Yes, there have been ups and downs. And then I've updated the latest nationwide average price, UK all houses, at year end and at the end of March 2022. And I think it's around 265 now. So it looks really good here, doesn't it? In terms of nominal terms, since the 08 crisis, it's kept going up. So let's just go see here. Yeah, 265,312. Just to show you here what the average house price was in 1952. To show you what inflation does. 1,891 pounds. So quite amazing. The last time house prices, the average house price was in 4 digits, was in 1973 at 9,767. And if you look at the chart here as well, the UK house prices started zooming up. Really, the upward trend started basically after 1971. Not surprising. And here I've got the Bank of England base rate, of course. In July, when I did this, when I updated the nationwide to gold ratio, it was at 0.1. They've raised rates now to 0.75. It's still very low, as you can see. We've been up higher than 15%. Back in the late 70s, we've been above 13.5 back in the late 80s, early 90s. So there's a lot of room on the upside. And here comes the interesting part. This is how many troy ounces of gold needed to purchase the average house at year end and also at the end of March 2022. So I don't think I'm not sure I updated it for the year end 2021. I went straight from June last year to March this year, but it won't change things much. So you can see that how much of a bubble the how can I say 05 to 08 housing bubble was, because at one point here you needed over 650 ounces of gold to buy the average house price. And this is clearly like an anomaly going back, if you go back 70 years, as you can see here. Let's just see exactly what that ratio was back in 08. Okay. 672. So as you can see there, 672. And this is where the chart I showed you earlier of the real house price comes into, becomes more understandable because in terms of gold as well, UK house prices have dropped significantly since 2008. So in terms of real money, and on this channel, we consider gold real money and silver as well, of course, but gold is more of a wealth preservation money. Silver is more of a circulation, day-to-day money and currency, I would say. Yeah, so where is the ratio right now? Well, here we go. Just let's have a look here. So the ratio right now is at 179.39, and you can see that it was at 190 back in July or June last year, excuse me. And why is that ratio going down? Well, because the price of gold has gone from 1274 back at the end of June 2021. And at the end of March, we were at 1479. So house prices have dropped even more in terms of gold. And where can we go? I mean, historically, as you can see here, there's very good support for house prices just below 100 ounces. So I think we're still a long way away for bottoming. And what does this mean if we get to 100 and even below 100? It means it's probably a good time to exchange some of your gold or all of your gold. It depends how much gold you have for the average house or any house really in the UK. So that's what it's all about. Here was probably the best time to sell your house and buy gold, of course, because gold back in 08, believe it or not, we were still trading around 350, or it's just started picking up here, or right, gold price 08. 450, anywhere from 350 to 450. So that was the best time, 2008, to exchange your house. Or maybe if you had a property business and you had a lot of properties that were leveraged, it was probably the best time to do it. I'm not saying you need to sell your house if it becomes cheap in terms of gold, because you still have to have somewhere to live. What I'm trying to give you here is an idea of the real value, house value. And below here, I've just got it in terms of gold sovereigns, which is about 0.2345 of an ounce, because the gold sovereign it's still considered £1, the face value, and it's legal tender. So if you go back to 1952, you can see that it kind of shows how the system was a lot less inflated, because it cost just over £600 in terms of sovereigns, 600 sovereigns to buy the average house price. And by then, of course, the UK had gone off the gold standard, but you can see that the average house price at that time was just below 2,000. So what do I think is going to happen now in terms of the house prices? And why did I say that the party is over? Well, it looks like the party hasn't been over really since 2008. If you look at the nationwide real price, and if you look at the price of the average house price in gold. So the problem with what we're getting now is that wages are not keeping up with inflation or with house prices. So they're becoming more and more unaffordable. But I think with interest rates starting to rise, bond yields starting to rise, and we're seeing stories, of course, and I'll share some stories here. They're focusing right now on other things, like the energy prices, but pretty soon, in 6 to 12 months, people are going to be talking about house prices, I think, because they're bound to level off in nominal terms. They might even drop in nominal terms. So you can see that UK braced for a prolonged period of stagflation. Analysts warn of anemic economic growth, even contraction, alongside soaring inflation. So that doesn't help. There's another one here. And this one, I just want to point out something as well on this one. This one says energy chiefs warn of truly horrific autumn for British households, call for more government help over concerns up to 40% of Britons will face fuel poverty from October. Well, the first thing is that this is going to affect mortgage servicing affordability. It's going to affect everything. So that's why I said in 6 to 12 months, we're going to be hearing probably about a housing crisis. I'm not talking about a crash in prices, because if anything, prices have crashed in real terms since 08. The other thing I would say, it's not fuel poverty, it's poverty. It's just plain poverty. And the other thing as well to finish off is that the more the government helps, the more government hurts, because where does government get the money to help Peter? Well, government gets it from Paul. So I think this is a bad idea, but they'll probably go ahead with it as usual. So with that, let's quickly look at where the markets are this morning. Yeah, I said yesterday in the short term, gold and silver could do anything, and lo and behold, they did. I'm still, of course, I still haven't changed my mind about hard assets and precious metals. We're seeing the bond yields, as I said, rise quite sharply. We'll come to that in a minute. So right now, yeah, 8:42 a.m. London time. Gold is at 1942, is down about 7. High's been 1952 and the low 1939. Silver is just below 25, down 20 cents. High's been 25.27, the low 24.89. The Dow is down 29. The NASDAQ is down 82 and the S&P is down 12. Yes, the markets did very well yesterday, despite the fact that yields went up a lot. And then after the close of the markets, we had some really bad data or results from Netflix. I think Netflix dropped almost 25% after hours. And it shows that discretionary spending, is going to fall off a cliff, because people have more important things to pay for than Netflix. Not that Netflix isn't an interesting platform, streaming platform. So, and I saw the other day as well that about 1.6 million subscriptions for streaming services have been canceled in the UK as well. So I'm not too sure about the stock market move yesterday. I think it's a counter trend rally. Sometimes in bear markets, you get the biggest rallies, bigger than even during bull markets. To the currencies, we've got sterling up 15 pips, or 0.1%, just above 130. The euro is up 0.25%, 108.16.5. The dollar is down a third versus the yen, taking a breather. The dollar, the yen, wow, overnight it's traded almost up to 130, and I think that's a really important line in the sand. It's going to make it very hard for the Bank of Japan to keep their accommodative policy, and it could be a trouble for the rest of the world, as I've said many times. So yeah, the high was 129.41 overnight. Right now we're at 128.54. The dollar has actually risen quite sharply as well versus the Chinese yuan, maybe to do with what they're doing in terms of lockdown in China. It's now at 643, up 0.25%. Dollar is down 0.25% versus the Swissy at 94.92. Aussie dollar is up 0.2% at 74.25, and the dollar is down a third versus the Canadian dollar at 125.72. Kiwi dollar is up 0.5%, 67.73. So a quick look at the general commodities. We've got WTI crude up 1.6%, 103.50. Brent crude is the same, up 1.6% at 108.28. High grade copper is down just under 1% at 469. And natural gas, US nat gas is down 7/8% at 718.80. Last but not least, the 10-year yield hit a high overnight of 298. So we're almost up to 3%. Right now it's unchanged around 291. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.